It doesn't matter if you're a huge corporation or a tiny startup, you've all got the same nagging problem. How do you manage that constant trickle of tiny cash expenses? The ones that can just spiral out of control if you're not careful. Well, there's a simple but really powerful system for that. It's called the Petty Cash Book, and we're going to break down exactly how it works. Seriously, think about it. A big company has these complex accounting systems for massive deals. But what about the really, really small stuff, like a 200 naira bus ticket for an employee to run a quick errand? I mean, you're not going to write a check for that, right? But if you don't track it, that money just vanishes. This exact problem is why the petty cash system was invented. And look, we're not just talking about one bus fare. Every single day, it's a constant stream of little things. A few pens here, postage for a letter there, some milk for the office kitchen, a quick taxi ride. On their own, they seem like nothing. But when you add them all up, week after week, you've suddenly got this huge, untracked hole in your finances. It's basically organized chaos. So to bring some order to that chaos, businesses use a special tool. This isn't the main accounting ledger where you track big things like payroll or rent. Nope. This is a special journal with one job and one job only, to keep a perfect record of all that small fry spending. Let's meet the Petty Cash Book. Okay, so the word special is key here. The Petty Cash Book is what's known as a subsidiary book. Think of it like a side journal that handles the nitty-gritty day-to-day cash payments. Its whole purpose is to keep all these tiny transactions from cluttering up the main company accounts, while still making sure every single naira is accounted for. It's all about keeping things clean and organized. All right, so having the book is great, but that's just, well, it's just the book. You also need a system to actually manage the cash itself, and that's where this really clever method called the Imprest system comes into play. Honestly, this is the engine that makes the whole thing run so smoothly. The Imprest system is actually pretty simple. It all revolves around a fixed amount of cash called a float. The easiest way to think about it is like getting a weekly allowance, or pocket money. A specific person, the petty cashier, is given a set amount, let's say 20,000 naira, at the beginning of the month. Their job is to make all the small payments out of this float. And the real magic is what happens when they need more money. So here's how that cycle looks in practice. First, you start with the float, our 20,000 naira. Step 2, as the money gets spent, the cashier has to collect a receipt or a voucher for every single purchase, no exceptions. At the end of the month or week, they report what they've spent. Let's say it was 15,500 naira. They have to present all the vouchers to prove it. And then, this is the key, they get reimbursed for the exact amount they spent. So they get 15,500 naira back, which brings their float right back up to the original 20,000. It's a simple, self-correcting, and perfectly controlled loop. So that's the big picture. But how does the actual record-keeping work? Let's zoom in on the book itself and see how a single transaction creates this really clear picture of where all the money is going. Okay, put on your petty cashier hat for a second. An employee comes up to you with a receipt, a voucher, for 300 naira worth of envelopes. You hand them the cash from your float, and now it's time to log it in your book. Now look at this entry. It's simple, but it tells you everything you need to know. You've got the date, what was bought, stationery, and the voucher number as proof. That 300 naira goes into the total paid column. But here's the really clever part. You also put it into a specific analysis column, in this case, the stationery column. This is what lets a manager see, at a glance, exactly how much was spent on every single category. It's brilliant. So you might be thinking, is all this really worth it for just a few hundred naira here and there? Well, the answer is a huge yes, because this simple system has some incredibly powerful benefits that are just fundamental to running a business well. First and foremost, it gives a business real control over those little expenses that can so easily add up. And because you need a voucher for every single payment, it creates a solid paper trail. This prevents misuse of funds and makes sure there's accountability for every penny. But the real payoff? It's those analysis columns. They become a gold mine for budgeting. A manager can see instantly if transport costs are spiking or if stationary spending is getting out of hand. And that leads to much smarter financial decisions. And that brings us to a final thought. This system isn't just for big companies. The basic ideas, setting aside a fixed amount of cash, tracking every single expense, and then analyzing where it all went, are totally universal. So the next time you're looking at your own bank statement wondering where all your own petty cash went this month, maybe ask yourself, could a simple system like this bring a little more order to your own budget?